Hey everyone, it's Mike from Orderflows, and welcome to today's video. Today is Thursday, January 12th, 2023, and this was a day a lot of people sort of had circled on their calendar. It was CPI day, and there was a 1 month 0.1% dip in CPI, and a lot of people are starting to say, well, look, inflation is cooling off. However, the core was up 0.3%, which annualizes out to more or less about 4%, which is still about double the Fed's 2% target. So I don't know. We've got the dollar's been weakening. We got budget deficits. Consumer credit is off the charts, basically. It's soaring. Everyone says, oh, the consumer spending numbers were good in, November, December. Well, yeah, it's because the price of everything else is going up. So people got to spend more. And of course, we still have inflation. I don't know why they say, well, inflation is low. I go to the grocery store, I see stuff. It ain't up 5% or 10%. A lot of the stuff is up 20, 25 and higher. So, inflation is here to stay. Even though we got a little bit of a dip in inflation, it's just like nothing, right? Basically. So, but anyway, that said, if you remember last month, the CPI came out, there was all this talk about the number being leaked and, sort of coming into the number this morning, very tight range as to be expected. Anytime you got such a big number that's going to affect the market, we basically had this range between, 95 and 3/4 to 85. So, more or less a, 11-point range, just slightly above it. But as we were getting closer to the number, you saw the market start to rally. And I think, in the back of some traders' minds, they were thinking, oh, last month, the signs were there that the number was leaked, even though the government, oh no, there's no leaks ever in the government. Yeah, which is, you could take that for what it's worth. But you saw the market basically, rally from this, 96 and a quarter all the way up to right before the number. I mean, I'm not going to look there, but, 725, it got, it was almost a 10-point rally. Okay, which is what the whole range was coming into that morning. But honestly, I think that if you were sort of trying to play that, oh, this number's been leaked, you got your head handed to you. Obviously, the number came out, market spiked up, got away up to 19.75, then immediately sold off down to new lows, very low, sharp low, 54. Then what was interesting is relatively soon we traded back up to new highs, actually at 21.5. And surprisingly, we came back down after the cash open, back near our lows. And then what happened later in the day? We sort of, I don't want to say we went sideways because, this is a big sideways move, but, relative to that volatility we had earlier, it looks sideways, but still, you're still talking 77 up to, 03. That's, what is that? 25-point range, if you will. But then it started coming back up towards the high late in the day. We didn't quite take out that high. I mean, our high was 21.5, but we did get back up to the 17, 18 level. And right now, we're trading around, what is that, 07. I think we spent a lot of time around the 04-ish area here. And we're sort of poking our head back up. Now, what was interesting in the order flow is, a few things. So this is my normal footprint 30-second chart. Okay, on days like today, I know there's going to be volatility. Trying to watch a 1-minute chart it's going to give me extra stress because the market, you're going to have big movements. I like to sort of go down to, for me, it's a little bit easier to read the order flow on a quicker time frame. I use a 30-second chart on the E-minis. So obviously, you're not going to want to get involved around when the number comes out, specifically because of how today reacted. I mean, I've been trading around numbers since, the 1990s. So, what is that, 30 years? And I've seen this happen over and over. Usually you would see it on non-farm payrolls. I remember the time when CPI was just like nothing. We got CPI today. Oh, okay, let's go have breakfast. But now it's like, CPI is the big thing. But you're seeing, right, the nice movements that you're getting even on the 30-second chart, right? 87 down to 75, so even on a 30-second chart, you're getting 12 points of movement. Now, this is just a normal footprint. And on days where you're going to have a lot of volatility, looking at a normal footprint, in my opinion, is not going to be very effective. I mean, you can, right, if you know what to look for. I like to simplify things. That's why I like to use things like the value areas of the bar, where 70% of the volume trades, right? Value areas is sort of a carryover from volume profile and market profile. Which just gives me an idea of, is the market balancing or is it running, basically? Is it, I don't say out of balance, but is it making a move? And for me, the easiest way to see that is with value areas. And, on our software, and actually now, since we put this on our software over a year ago, I'm starting to see other order flow software add this in. So you just scroll down here. If you're using my software, the Orderflows Trader software, enable value area. I like to use it until tested. And we also got the engulfing value area, which is a slightly more powerful value area. Okay, it sort of carries over from the candlestick, engulfing value areas. But I actually have one open on my other tab right here. Okay, so let's just sort of go back. And again, trying to analyze the order flow when a number comes out, you can't. In all honesty, some people, well, you put a buy stop here and a sell stop here and this and that. You're not, right? Because you can see the liquidity in here, right? You put a sell stop in here, I don't know, call it 04, right? You're not going to get filled until it trades down into the 80s down here. Even that, there's just no volume going through. It's just an algo probably just ran right through the order book. You don't see anybody buying. You don't see any counter trades going on. And this happened just like that, super fast. Then obviously we found that low. So again, you're going to have a big number come out. Everyone is waiting for the CPI. Even I was talking about it. And I don't really get too excited about numbers, but you got to keep sort of your eye on when you have numbers coming out. But once the market settles down, I like to give it minimum of 5 minutes. But on big numbers, non-farm payrolls, Fed, I like to give those slightly more time, about 15 minutes or so. So even though I'm looking at the market, I'm not really looking to get involved till a little bit later. So this is the 745 area in here. We sort of calmed down a bit right after this initial buying and selling burst going through. So what I'm waiting for now is, because it puts us around 745, any sort of trend developments, one way or the other, because now the market's had time to really digest the number and everybody's like, okay, this is what I want to do. Now today, again, if you're watching the chart, it didn't just make a move up, but then it made the move down, pull back, made a move down again. Honestly, I'm surprised we didn't take out that low of the day over here that was made during the number. But let's take a look. What could you have seen in the order flow on this move up, this move down, this move back down, and possibly this move back up? And that's why I like to use sort of the newer, more advanced methods. I don't say it's an advanced method, but it's one of the ways that I use order flow, and I've been teaching to traders, is looking at the value areas. Now, the advent of my newest version of Orderflows Trader, we actually will color in the value areas of the bar. If it's a green up candle, it's a green value area. If it's a red down candle, it's a red value area. Or if it's a doji candle, meaning it opened and closed at the same price, it'll be gray. Okay, but really what I'm looking for is a combination of two things. I'm looking for an area, well, actually three things. I'm looking for an area where you got a lot of overlapping value. Here you got 5 bars where these value areas are overlapping. That's telling me there's balance being formed. Next thing I'm looking for is a gap in value, either to the upside or to the downside. I have this big gap in value from, this is the value area high of this bar. It's at 95 and a quarter. Then the next bar, the value area low is 97 and a quarter. So about 2-point gap between the value areas. It's not a gap between the bars, it's a gap between the value areas. And the third thing I'm looking for is this value area, this virgin value area, if you will, this area that hasn't been retraced back into in this bar, to kick off, right? So now I'm extending out the value area. That's what this green area is. I'm extending it out until it gets tested again, or in other words, gets retraced back into. That's why you don't see a green zone coming out of this bar, because the next bar traded right back into it. Here's another one up here. It came right back into it. But I know that once I have sort of these three things, I got a balance area, then I got a gap in value, and I've got that naked or virgin or whatever you want to call it value area that hasn't been traded back into. To me, that's a very strong signal. It's a go signal, right? And of course, you got to wait till this bar closes, because one, you're not going to know that this value area gap is not going to be confirmed until this bar here closes, because obviously if this bar is still trading, if you trade right back in there, then you're not going to have a gap, because the value area low of this bar theoretically could trade back into the value of this bar. So again, you're not going to know until it closes that you also have this value area that's been hasn't been retested. Okay, so once this bar closes, then you're off to the races, right? Then you could be getting long 4,000 area, okay, and it shot right all the way up to, to 10 here. Then you see on the way up, you got another value area that's being abandoned. So you got one here, and this is the one that triggers your long. Then you got another one coming in here. We trade all the way up here. So again, if you were trying to buy, add on, you're long already from double low. Maybe you could have thought of adding in, after you see this bar. But again, if you add it in here, it pulls back down to where? The area where you had that value. And then what happens? It goes sideways. Okay. But really, this is the trigger right here, right? Based on those three things. All right. So then the market starts going higher. Okay. Now, again, at this time, it's 8 o'clock. Okay. So we got 30 minutes before the cash open. We get up in here and we have this red down candle, right? We got the red value area kicking off in here. Now, it's a naked value area, right? But you don't have a gap, right? It comes, this bar's value area high comes right up to the value area low, and you don't necessarily have a lot of this, the overlapping, right? You got these two bars overlapping, and that's it, right? Over here, you had 1, 2, 3, 4, 5. Okay, so yeah, it's not as nice to see, not as strong. And you get another bullish one here. But again, what do you get, right? You got the gap, but 1, 2, 3 value areas that are overlapping. Now you're coming up near the high. Again, you could buy it. Again, there's nothing wrong with buying a high. I just prefer to look for reason to get short off a high. And, you're buying into this high. Maybe you're buying around 19. It only gets up to 21.5, then it comes back down. Now, the thing with value areas, and especially if it's value areas that are, coming out of a balance area like this one, I'm always looking for these value areas, these ones that are being drawn out, these untested value areas as a support or resistance, right? Just like here, right? You have this big value area from when the number came out, basically between 09 and 14, and you can see the market rallied back up to this value area, got a little bit above it, and it's just acting as this resistance, right? You got this one here, it's acting as resistance over 1, 2, 3, 4, 5 bars, and eventually you pop up. Okay, now on this way down, again, now we're sort of coming into that time before the cash open where you got to be careful, because obviously once the cash opens, whatever was bullish could become bearish. The order flow is going to flip on you really quick. So let's just, take a look, right? Obviously, you got the abandoned value area here. This one was nice, right? You have this move down, then you're sort of overlapping 1, 2, 3, 4, 5, 6 bars. And again, even though it's just by one tick, to me, that's still overlapping. Then you get the gap here, right? And you got your value area being abandoned here. And this is a nice move. But again, me personally, I sort of shy away from taking trades right ahead of the cash open, unless I think it's going to be a quick trade and I can be out once the cash opens. So once the cash opens, the price movement's going to really pick up and get going. But still, this was a decent trade. It was 813, and it's a move from around, I don't know what, the 4,000 point again, down to the 90s right in here. So anyway, so the cash opens. Okay, and what do you see right off the bat? You see the selling coming in. You've got value area, value area, value area, value, 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 right? So you got 1, 2, 3, 4, 5, 6, 7 that are overlapping. And this last one by a hair, by one tick. And you got that naked value area. What do you think the trade is doing? Then you get the gap here, right? So once this bar closes, right, it's 832 and 32nd bar, you should be thinking short all the way. And boom, it breaks down from, you know, the 39.90 area all the way down. I mean, it was like a snowball going down to the 64s areas. And even on the way, you're seeing, you know, anything bullish coming in. Yeah, I mean, you got this one value area, this one gap here, right? This abandoned value area, this naked value area here, but it doesn't really go anywhere, right? I mean, this would be the bar that you're waiting for it to close to decide whether you're getting long or not. But it's coming right into an area where you've got this value area, you know, this resistance area. So even if you're looking to get long, you're getting long into resistance, right? And remember, this market has been kicking off a lot of resistance here, here, here now, right? So trying to buy into resistance isn't always the greatest trade idea. And then what happens? The market just keeps on going down, right? Even here, you've got 1, 2, 3, 4, a little balance area here. You got the value area being extended out, right? It hasn't been retraced to in the next bar. It got within one tick. Then you got the gap in the value area. You should still be thinking short. And the market just, you know, kept moving down, down, down. And again, you know, there were some potential signs of a potential long in here, right? You've got this this bar here at 851, right? And value area is overlapped 1, 2, 3 bars, and it gaps up. You have this value area being extended out. Okay, possibly. Then you wait for the next bar to come in, and it doesn't even go any higher than this bar, right? It's sort of one of the signs that there's actually some signs here in this bar in the order flow that it wasn't going to go up, at least in the next bar or two, is the fact that it's closing, you know, off its high, right? Generally, you know, these bars, when you're looking for order flow or anything, you know, even candlesticks, right? If you're just watching price action, obviously the bar that goes up and then sort of closes down at its midpoint is a weak bullish bar at best. If anything, it's like, to me, it's more slanted more towards slightly bearish. Okay. Then it finally finds its low here around 854, and then it starts making its move back up. And as it starts making its move back up, again, you're seeing some nice bullish value areas, but then it comes down here as bearish, right? You got that value area that's being abandoned right here. Then it comes down into this little dippy area, okay? But what do you got? You got 1, 2, 3 value areas that are overlapping. Then you got that big gap here. Again, you're sort of running into your resistance here, right? This zone. So you still got to wait, right? You're not going to just go ahead and pull that trigger, right? What you're going to want to see is obviously this bar's got to close, but this bar, right? You want to see it start moving a bit higher, and it's up as a doji candle. It opens and closes at the same price. So okay, let's wait for the next bar, right? And then it's off to the races again. You know, boom, over the next several bars, it rallies about, you know, over 10 to 15 points. But look at this here, okay? You got 1, 2, 3 bars overlapping the value areas, and the value area lows are slightly moving higher. You got that gap, but this bar here, it's trades one tick above, but it's hanging around the high of this bar, okay? As opposed to this low here, right? You got the 1, 2, 3 value areas, and then this bar is starting to go up, but then it closes back down, and then this bar doesn't even go any higher. So comparing this order flow to this order flow here, you know, it's very similar in the sense of the 1, 2, 3 gap and the value area, but the difference is this bar, right? We're still hanging around the high. Now this bar, we close up right near our high of the bar, right? We didn't come back off halfway down, and then the next bar open up. We're still holding that price movement, right? That price action higher. So you'd be looking for this market to potentially go up, right? As opposed to down here, right, where it went up, and then the same bar it closed down at its midpoint, and the next bar opens up down there and then trades lower. So, after that order flow here, right, then it was just right back up, right? We got all the way back up from, the 39, 84, 85 area, all the way back above 4,000. So anyway, I don't want to keep this video going on much longer because it's pushing 20 minutes, but I hope you guys understand, right, the importance of looking at things such as the value areas in the order flow. And again, I've been teaching this for over a year, going back to 2021, and I'm just starting to see it in more and more order flow software, which I guess is a good thing. People sometimes ask me, oh, did you see what so-and-so is doing with their order flow footprint? They're adding what you got. I'm like, yeah, okay. It's just a way to read the market, right? People, oh, you should have some copyright or something. No, it's all about formatting the data into an easy to read form. Yeah, do I wish that people would give me a credit for it? But yeah, like say, oh, I got this from Mike. But it's just one of those things where keep it simple. You don't need fancy indicators. Even though I got a lot of indicators that read order flow for you, sometimes if you just keep it simple, understanding where value is, understanding where markets balance, it's just going to help you become a better trader, right? By understanding what is happening in the market rather than reacting to what's happening, right? You can react to it once you understand it. It makes it much more easier to trade. So have a great day, everybody, and I'll catch you guys on the next video. Bye-bye.